Hello there, traders. This is Rob Reinhold, and it is Thursday, September 5th, 2024. Let's jump into the day. In this session, we're going to talk about what happened during the day, some of the news. We're going to take a look at the stock markets, the commodity markets, and then we're going to find where is the best and the weakest sectors, and that's where we're going to focus our trading opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So yesterday we had a pretty quiet day, and we pretty much had the same thing today. So if we take a look at the news, we had two reports out this morning. Before the bell opened, we got the ADP employment report, and this report was weaker than expected. Now this is kind of a preview of the jobs report on Friday, but people don't really take it all that serious, but it did weaken the market a little bit. I think expectations were for around 150,000 jobs, came in a little bit weak. But then at 10 a.m. Eastern Time, we got the services PMI number, and it beat expectations. Now, this is 2/3 of the economy, the services PMI. And so the fact that it was better than last month and beat, it actually gave the market a little bit of a rally until everything kind of fell apart at the end. So at the end of the day, a fairly flat day mostly. We had the Dow down 0.5%, S&P down 0.3%, the Qs were up, and the Russell was down. As you can see, everything pretty close to in the middle. Oil was flat, and gold was up a little bit. So ultimately, we've had 2 days here where we basically have just parked on this 50-day moving average. So you can see that this is where we are. This is the S&P. We clearly hit resistance here. We're having a pullback. We've come down to this 50-day moving average, and we're just sitting here. Now look, over the entire space of the year, you're going to listen to me a lot, and I have no problem giving my opinion. I've been wrong a ton of times. I'll just say tomorrow that I was wrong. That's how trading works, is you go with probabilities. What is the most likely thing to happen? That's trading. There are always a few days of the year where I have to come on and just throw my hands up and literally say, I don't know. This is where we are right now. We have the major payrolls report out tomorrow. I'll have a much better idea tomorrow. If I can see tomorrow's candle, I'll give you an opinion. And in fact, on the trading room, I'm going to do tomorrow, I'll give you my opinion. Unless it's another doji here at the 50-day moving average, but I don't think that's going to happen. I think we're either going to have a big up candle tomorrow or a big down candle tomorrow. Now, as I said, I throw my hands in the air, but if I had to make a bet, which, remember, as traders, you don't have to make a bet, but I am still leaning bullish because this is technically still a bull pullback. So on the S&P, if you held a gun to my head and said you've got to pick long or short, I'd pick long, but I would not be too comfortable with that. And we jump over here to the Qs, though. Now it's a different story. If you said, hey, Rob, here's the chart on the Qs, would you rather be long or short? I'd rather be short. So we got this big sell-off. Now, yes, we've got some green candles, but look, we've got long upper shadows, meaning anytime it rallies, it just falls apart. It's not great price action here for the Qs. So we just took a look at the S&P, we took a look at the Qs, and then if I come over here to the RSP, the RSP is the equally weighted S&P. This is clearly a pullback. Moving average are still going up, a pullback. We even got a long lower shadow starting here. Look, it is muddy. There's no question about it. For right here, right now, the overall call in the market is very muddy. I think whenever it gets muddy, you really got to focus on your sector analysis. There were 5 sectors that we said last week were showing outperformance. What were they? Utilities, real estate, healthcare, finance, and industrials. Take a look at this week's performance. Utilities are up. Real estate is up. Financials are flat. Healthcare is down, but only down 1%. And you can see that industrials has not performed. So out of those 5 outperforming sectors, even in a down week, they're still doing okay. What do we say were the worst ones? We said technology, we said comm services, and consumer. And out of those 3, 2 out of the 3 are down fairly significant. Go with the sector analysis. Whenever the market is muddy, just say, I don't figure it out. I don't know what's going on. I'm just going to look at my sectors and make my trades there. And looking at the heat map, you can see that today the large cap techs actually did pretty well. This was probably going to be a much bigger down day. As you can see, lots of red across the board, but the large cap tech did have a little bit of a bounce, which helped out overall. So where are we? I'm at a 0. We're sitting on the moving averages. One's going up, one's going down. At this point, I don't know. Tomorrow, I think I'm going to have a much better idea. And in fact, tomorrow by probably noon, after we get the rally in the morning or the fall in the morning and to see if it retraces, I think we're going to have a much better idea. So I'm not going to share a ton of trades with you here because I'm going to share a ton of trades with you tomorrow. This here is Zeta, Z-E-T-A. It's a tech stock. You can see that it is completely ignoring the market. It's doing its own thing. Take a look at that volume spike today and the candle today. Everything about this, it's been on my watch list for a month or two. It still looks like it wants to go higher. So I think you can take a look at something like a 27 for a target, maybe even a 28. So again, 26, 28 bull call spread if you want to be more of a +1, 25, 27. I think this is where you want to hunt. Just things that have just completely ignored the rest of the market. And on the downside, this chart looks atrocious, and the thing that jumped out to me was look at this volume. We've had up days in the last 2 weeks. This one has not. It has been all selling and heavy selling. This is BBWI or the old Overstock.com, which is now Bed Bath & Beyond. Who cares? This thing is clearly wanting to go lower. Could we get a bounce? We could always get a bounce. It's had a big move from 36 down to 29. Just give yourself enough time if it bounces, because this thing is most likely headed lower. We call these the March of Death. The March of Death, where they just keep stepping down. And what you want to do is you want to take short positions anytime they have a little rally or anytime they have a base. This may not be the best entry on this trade, but if you give it enough time, then it's likely to continue to weaken, so you'll be able to move into a profit. Let's talk tomorrow. As I said, payrolls report tomorrow. Estimates for about 165,000 jobs, 4.2% unemployment, that's a little bit lower, and 0.3% wage growth. If this report comes out weak, all of a sudden now, remember when we were talking about good news is bad news and bad news is good news? Where like a weaker economy meant that the Fed was going to cut rates, which was good. We're now moved into the, hey, we don't want it too weak. So at this point, bad news is bad news. If this report comes out below 100,000, I think it's trouble. I think it's trouble for the market. You're likely going to see probably a 1 to 2% down move tomorrow. If this report comes out over 200K, I think it's positive, but I think people have to walk back some of their rate cut bets, which ultimately is going to hamper stocks a little bit. I think it's going to be good. I think you'll see an up day of 0.5, maybe 1%. I think that's going to be about as much as you get. So look at it. If it beats by a lot, I think you get a mild move up. If it misses by a lot, I think you get a big move down. If it's between 120 and 180,000 jobs, that is the sweet spot. If we get that report, I think we're going to be up 1 or 2%. So just right is better than a strong report. If we get right at these numbers, if it comes out at 165K, the market is going to love that number, and we're likely to see a nice bounce off that 50-day moving average. We will know tomorrow. Right now, I think you can flip a coin and do better than anything I could possibly say. So let's all wait till tomorrow, and we can make our trading decisions there. Goodbye, everybody.